Good morning, everyone. Let's look at your markets for today. I'll start with the economic calendar as always. As we can see, we've got some unemployment rates for China. This should affect the Aussie potentially. And we had consumer sentiments on the Aussie. We had business confidence on the Kiwi. We've got the 10-year bond auctions, German bond auctions. That'll affect the euro. That's at 11.40. Energy outlook, not really relevant for the dollar in my opinion. Job openings, this could be interesting. Might move it, might not. But if you combine it with the Bank of Canada's interest rate decision, you could see some movement on this pair, on the dollar CAD, for example. So that's definitely what we're going to keep an eye on today, is that interest rate decision. And everything else is just, maybe on the euro we can see something on the German, the Bund, as they say, 10-year Bund auction, which is German for bond. And we'll see if that gives us some volume, and then obviously this one will definitely give us some volume. So we'll keep an eye on those two today and see if we can trade that. Let's look at your sentiments. Start with the indices. S&P, still going down. Now the tech sell-off, it's really hitting the S&P. And with Tesla not making the S&P, Tesla's shares are also going down significantly. They didn't qualify to be included in the S&P 500. So that went down significantly as well. We've got the DAX down 1%, FTSE pretty much neutral. The Euro stocks, that's down 1.4%. Just about everything is down. Everyone's taking the money out of stocks at the moment. On commodities, we've got gold down 0.1% or say 0.2%, and silver down 0.2%. I think this is bottoming out. It is at a key support level at the moment, or it was a few hours ago. So we should keep an eye on that. This could potentially be bottoming out. Obviously, as I mentioned, this 1 minute doesn't matter. You're not looking at these signals. Ignore these signals. It's not about the 1 minute. It's about the actual movement. That's going to tell you if it's neutral, up or down, or whatever the case may be. You could move it to 1 hour, hourly or daily or whatever. You'll get a different signal there. But what you're really looking for is that, nothing else. Forex, let's look at the individual pairs. Oh wow, look at that. When was the last time you saw an absolutely perfectly neutral currency? That's insane. Yeah, this is neutral, 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 neutral. Everything's neutral. Now we had a big move yesterday on, let's say, 4 different currencies. We had strengthening in both the yen and the Swissy, as well as the greenback. And then the pound just got punished further, on the back of that Brexit announcement by Boris Johnson. They're under a lot of pressure to get that deal through, and I think people are starting to get concerned that they're not going to get it, especially if they're trying to use what I call Trump tactics, basically a pissing contest. If you try and play a hardball, they'll just call your bluff. The UK doesn't have any leverage in Brexit to be able to play hardball. So, I mean, it'll probably end up being a no Brexit exit, so, no deal Brexit. So we'll see what happens there. But obviously the pound's getting punished on that. Then people were flocking to the dollar because it's still in the back of their minds, still a reserve currency. That should have changed, in my opinion, by now. But I mean, it's still strong. It's still a reserve. So when there's uncertainty, they go put their money in safe haven currencies. So we saw the yen strengthen against the Aussie, the euro. and obviously the pound, and we saw the Swissy strengthen slightly, and then the US. That's why this is neutral. It's just been strengthening. So yeah, people have been flocking to those three, and obviously taking the money out of the S&Ps and other indices. So I mean, if gold goes down, the dollar goes up, that we know, but I think this is bottoming out, so we should really keep an eye on this. Obviously, everyone wants it to go lower, the gold specifically. They're still aiming for the 1800 level, so that everyone can start going long again. If it reaches 1800, even I am going to go long on that. But people are waiting for that, so no one's going to start buying now when they're waiting for the 1800, I think. But it is at a key support. We'll see if it holds, and if it does hold, it might turn around. I mean, these articles are all saying this one says it's bounced from a key support. Is the bulls back? No, I don't think they are, honestly. I think we'll see a little bit of ranging still, but inevitably it'll go below 1900, I think. Or, you know, I can't be sure, but this is what I think. So we'll keep an eye on that. Anyway, that's market sentiment. Let's look at the individual pairs. Now you'll see my balance is up again. I had a trade yesterday on this pair. My indicator threw 3 little arrows, and usually when there's 3 arrows, a big move is coming. So I went short on this, and I took profit just there at about just below the 76.200 level, just below that. I took profit. So basically I made up all my losses. I made it up in one good trade. So I had 3 bad trades, 1 good trade, and now I'm down, let's see, $3. So it's pretty much where we started. We had those 1, 2, 3 bad ones, and then 1 good one making up for all 3 bad ones. This is what happens when you let your winners run and your losers, you know, you cut them short. Put in those stop losses, put in those take profit levels before you open the trade, or decide them before you open the trade, and then let them run. I mean, if it hits the stop loss, that's fine, because 1 good trade with a ratio or risk reward ratio of 3-to-1 will make up all the losses of 3 bad trades in a single go. I mean, look at that. We started with 3, we're basically there again. After having a really bad start, 3 bad trades in a row, overextending the account. Look at the size of these trades. That was 4, that was 3, this one was only 2, and it made up those losses because the account equity was so much lower. By the time we got to this trade, the account equity was about 2,000, I think, give or take. And then this one made up for all of it. So yeah, I mean, that's what happens when you let your winners run and you cut your losers short. You tend to make up a host of bad trades with 1 good trade. Yeah, so we'll look for opportunities quickly. We'll see what we can see. Now I am going to look at this today. We're at a double top, as you can see. Well, it's more than a double top, but this is a key level, so this could rebound down again, and that's what I'm going to keep an eye on. So we'll draw in the levels. Let's just go to the daily first. Zoom in ever so slightly. You see, it's that level. Yeah, it was support before, and it's turned resistance, so it is a key level. I should change the color to indicate it's key. I'll make it magenta, because that's when you know it's an important level. Now if this level breaks, then that'll be our next level. Obviously it bounced off there again, so that'll be our next level. Then we've got this level, also quite important. We'll change the color on that one too. and then this one, change the color on that. These are all big support and resistance levels, and we're between these two. I think we'll see it rebound down and then move further up potentially, because overall we're still in a downtrend, but you know, a big candle like that's very engulfing. That could potentially signal a reversal. But obviously we've got the interest rate decision today that's going to affect whatever's going to happen. It's going to hit one of these levels. So it's going to be fun. It's going to be fun. It's something to keep an eye on. I'm going to trade that today. Hopefully live. If I can trade it live, that'll be fun. But you know, living in the country that I'm living in, we don't always have electricity. We've got load shedding and stuff like that, so I can't always trade these things live. But I'll try and make a live video for that. Anyway, we've got the AUDJPY. I'll start here. We've got that key level at where it's at the moment. You can see that it bounced off this level. I expect this level to potentially hold for a bit at least, maybe come down to there or something before it pushes through. So I mean, the next two candles should be red, I expect. Obviously also a CAD pair, that's why this won't really move. It'll come down slightly or go up slightly, but we're waiting for the interest rate decision, so we won't see a lot of movement. We'll see a lot of dojis on this. I expect to see a lot of dojis on this, but yeah, I think it's topping out here for now. It'll come down and wait for the interest rate decision. Not trading it now because there's not going to be volume. Everything's going to consolidate on the Canadian dollar pairs before that interest rate decision. So we'll move on. AUDJPY. I mean, that V shape is a good indicator of where it's supposed to go now. We should see a further move. Oh, what am I doing? We should see a further move. Up. Let's just draw in a little arrow. But bear in mind, sentiment. This is just a retrace. So it's not going to go there. It's a retrace. So we're looking at this. So we've got the 38 level. It stopped just before it. Let's move this line on the 38 level. We've got the 50. So this should stop there. Should move to there. And then it should stop. So that's what I expect to see on this. Odd yen. I mean, there's nothing happening. It's going sideways. We had the big move yesterday. It should go sideways again. I don't know, until something big happens again. Aussie Kiwi. I mean, it's still in the channel. We could potentially see it bounce off here. Definitely could see it bounce off this. And it's respecting it. It's really respecting it. So I could potentially see myself going short here. Yeah, it's still the lowest point. So it's the right channel. I could potentially short this. Unless it breaks out now, because it's on this support line. It could potentially break to the upside now. But I'll keep an eye. I mean, the Aussie shouldn't go down against the Kiwi though. It should go up. I expect this will break. I think this is coming there. Because monetary policy is holding the Kiwi down. And that's not likely to change anytime soon. What do we have? Odd USD. So we know that the dollar got stronger yesterday, but it looks like we've got the Aussie fighting back. I like it when the Aussie fights back. I believe the Aussie is going to be one of the first currencies, or the next currency. Now, we've already seen it, obviously, in something like the euro, but I think the Aussie is the next currency that'll hit $1 per US dollar. So the Aussie to greenback ratio would be 1. I think the Aussie will reach that in the next 10 years or so, maybe 5 years, maybe less, I don't know. Obviously, it depends on what happens with the elections and stuff like that. But I mean, if Biden wins, then we're definitely going to see the Aussie hit $1 in the next, his first term, if it's his only term, I expect. But yeah, that's what I expect to see on the Aussie. So we'll see. For now, I think it's at this level where it's bouncing, so this should hold for now. Yeah, the retrace. This should hold because, greenback confidence. Euro, it's just the opposite, isn't it? It's like the opposite of this one. You could literally mirror them on each other. That level is that level. It's literally the opposite. I think we'll see it hold. This could be a potential if you zoom out. If you zoom out, this would be what the Elliott wave. This is leg 1, leg 2, leg 3, leg 4. Should stop at this level where it is now. It shouldn't go below this level. And then leg 5 will go there somewhere. What we'll do is we'll delete this one, copy this one. Oh no, that's not copy. There we go, that's copy. That's your target. Join our line. There's our target. Just happens to be on a key level as well. Slightly above, we'll move it down ever so slightly. Here we go. Right on the dojis, on the closes, on the highs, on the lows. That's going to be our target. We could potentially see this happening. So let's make this one shorter. And we'll add some more for future reference if we see this. So leg 1, leg 2, leg 3, leg 4, leg 5 should be the same as leg 1 or the equivalent of leg 3. Usually matches one of them. There are a bunch of patterns in Elliott wave. You can't really determine which one it'll follow, but it should follow one of them. I think we're going to see this level hold, then it push up. So yeah, I mean, what you would do here is you would put a buy stop above this level. So if it breaks this level, that one. If it breaks that level, go long. Anyway, we'll keep an eye on it. Do that. CHF. I mean, CHF strengthened. It's losing those gains again. I think this should go sideways now. Consolidate into a triangle or something. Euro pound. I mean, the pound's been punished so much, but I don't think it's seen the end of the run. This needs to come back into reasonable levels again, obviously. I mean, it's just creating new and new highs. That's a very good trend if you were trend trading. It's a very good trend. I mean, I could have potentially, let's just see if I added the indicator to this one, watcher. There we go. Let's see, it would have signaled Oh wow, it would have signaled at the bottom. We would have been in here. That's insane. That is absolutely crazy. But we would have gotten out again. Let's see. Yeah, so we would have taken a trade from 1, 2, 3, this level to that level only, and gotten out, and then we would have taken the next trade from 1, 2, 3. That would have been a loss, 50-point loss. Next one would have been 1, 2, 3, from there to there, and then that would have been 150 points. 1, 2, 3, from there. Oh my word, we'd still be in this at a 900 point. So 90 pips, almost 1,000 pips. We'd still be in it, but I would close it out there. I would have potentially closed it out there, to be honest. So from there, I would have closed about there, I think. Maybe not. I don't know. Usually the 20 moving average is my exit rule, so I mean, if it came to there, it's still 700 points. So 70 pips, easy. But I didn't have the indicator on here, so I didn't trade this. So we'll see. I mean, what goes up must come down, but I think the pound is just under too much pressure to fight back at the moment. Boris Johnson needs to make a deal happen. That's the only way the pound's going to survive. Just, oh, this is reversing. We had that. It bounced. It's coming up. It should consolidate into like a triangle or something again. So if you caught the breakout on the triangle, you could have gone short at this candle. Maybe at that one as your confirmation. You would have gone short. Easy trade, I guess. I was obviously already in a yen pair trade on the Aussie. I was in this one, I took that. So, I mean, I couldn't overexpose on the sizes of these trades using basically my entire margin. I couldn't overexpose myself. So I couldn't take this trade, unfortunately. Euro dollar breakout to the downside because dollar strengthened. We should see this consolidate now. I mean, do we need to say it? It's the same thing on every pound pair. What's the lowest point that on every pound pair? It's the same thing. It needs to come back and get back to median, but it's still going to push down. Yeah, we've discussed this one before. This one should consolidate and then push up again. This needs to change. New highest point is there. So, oh, it's at median. So it should gradually go. So it should consolidate to the bottom and then push up again or break out. So we'll watch this level, obviously. Dollar yen. What are we looking at? It just, I mean, at the big move, safety currency, then consolidating flag. This is an upside down flag. I don't know if you can see it, but then let's say there's a triangle. We want that point. Yeah, it's a wedge. So, I mean, we've got that long wick that's usually going to be retraced if you look at it at a support level viewpoint. We've got this support level, bounced off it. Yeah, bounced off it, and I mean, that's an indicator that it wants to retrace, but it's tried it a few times. So, I mean, that also shows you that it's not getting up. The bears aren't getting up on this. So, dollar yen, I mean, with yen being a safety currency, that's why this happened in the first place. Now it's consolidating. Kiwi yen, same thing. Ironic. Everything on the yen did the same thing. This came down significantly, hit that low, and then bounced back, and now it's ranging again. Same thing with gold, ranging again. So, I mean, it was a nice breakout though on silver. A very nice breakout, but I mean, I wouldn't have traded that. I don't know if you would have, but I wouldn't have traded that. Gold, I wouldn't have traded this either. Definitely not. Then last one, the kiwi. This almost looks like the like this, doesn't it? Same thing, because everyone flocked to the dollar when they took their money out of the S&P. So now we've got this, which is similar to everyone flocking to the yen for the same reason. So, and we'll see it. If you open the New Zealand CHF, you should see the same thing as well. I don't really trade it, so I probably won't even have it as an option in my symbols. Yeah, I mean, I can go get it, open the symbols and go get it, but I'm pretty confident it's just going to look the same, so there's no point in adding it. But anyway, so what did we see? Let's summarize. We've got all of these basically wedging. It should consolidate. We've got this one potentially moving up to there. Although it's already bounced off just below the 38.2 Fibonacci retracement, so it could go down as well. But watch it. I mean, keep an eye on it. And then we've got what was the other one we had? This one, I expect that to happen. This is based on sentiment. The kiwi is weaker. So based on sentiment, it should go up. This should go up to that level. If it breaks the channel, go long. Or if it breaks this level, go long. Okay, and then AUDJPY. Here we've got this potential move on the euro AUD, which means the AUD needs to go bearish, while I said on this one that the New Zealand dollar is bearish. It is a conundrum. It's two conflicting opinions on one same pair, but it happens. Here we've got if you look at the euro yen went up, whereas no, euro yen went down, euro pound went up. It's the same base currency, but it's doing the opposite, because there's huge sentiment in the opposing, in this case the quote currency. There's a huge difference. So that's why you can have opposing views. Just because both of them are on the Aussie doesn't mean they're both going to go down or they're both going to go up. It could be the opposite, because they just use the Aussie then as a base currency, and then the pair with it, the currency that's paired with it, that would be the determining factor on price. So I'll watch this level. If it breaks, it should reach that level. If it breaks this level, go short. So those are key. Let's just make this key for today is this level, and key for today is that level. So those are key levels. We'll keep an eye on them, and then if it breaks either one, in other words closes outside this range, we'll take a trade in that direction. You could just put your sell stop and buy stop in there now, just see what happens. But I'm going to trade the dollar CAD later today, so obviously need to Need to watch that. Okay, so what else do we see? We had that. We had, I mean, no, I wouldn't trade that. I wouldn't trade this. Euro yen, I wouldn't touch it. Euro dollar, wouldn't touch it. Wouldn't touch it. Yeah, this I'm definitely going to trade. This I won't touch now. It needs to keep going up. This needs to go down, but it's testing the upside of the triangle, so I mean, on the back of dollar strength, it could potentially stop there. The yen sentiment had the initial push, but I mean, everyone's in the market now, so that whatever they put in, they need to take out again. Let's say they find something else to invest in, like gold or whatever, then they need to take the money out of the yens, the Swissies, and the dollars. So we'll see some movement soon. This could potentially, a move like this could potentially just reverse itself and go back to where it was. I've seen that more times than not. To trade within the channel again. Big move like that pushes back to trade within the channel where it's supposed to, which would mean that this should go to there potentially, but not necessarily at this gradient. So it could do more like a steady decline like that or like that, but it needs to hit that trend line again. It almost always has to return to that line. This is median, so it'll reach median and aim for that next, because that's going to be people thinking, oh no, it's reversing, and then they get in and then it hits that trend line, and then the trend line holds and it pushes down further. So this should come back to the trend line. I expect it to be more a move like this, to be honest, more sideways. I expect everything to pretty much consolidate after the big move first until we get the breakout. So yeah, my opportunities today, I think, no, not that. This one, this is what I'll trade. So Aussie, Kiwi, and then I'll watch the level on the Euro Aussie. And then obviously dollar CAD, this one, definitely to keep an eye on this, very important day. Go either way. I have to see that level. If it reaches this level, I could potentially go short again. So hedge it both ways. Go long in the long term, take a buy. In the short term, trade the bounce off. This is the daily chart. It's at lows, hit the lows, went lower, got that level, bounced off. This should come up now. It should definitely start coming up now. And we've had the big candle. We should see another big candle to there. So potentially today's candle could push it there, especially if the interest rate decision is not favorable to the Canadian dollar. We could definitely see it push that level. So that level is 1.33100. That's what I hope to see by the end of today, depending on what the interest rate decision is. But I think it's going to be a bearish for the Canadian dollar today. So we should see this push up potentially. It's just market, so that I can look back at my calls in the future and say, I told you so. But I mean, this is literally me trying to predict the future on the interest rate decision. Not a lot of people will do that. They'll tell you, as I do in a lot of cases, when there's uncertainty, you watch the breakouts, wait for the breakouts on key levels. If it does one thing, then it should go there. If it does another, it should go there. But in this case, I think it's going there. It's not a potential one or the other. I think it's definitely going there. Even if the interest rate decision is not as bad as expected, it's not actually about the interest rate. That should stay the same, but the monetary policy they intend to implement following the decision, that's going to be the deciding factor. Makes it really difficult. But I think this is going to push up. I definitely think this is going to push up. So yeah, what do we have? What did we say? This one, I'm trading this one potentially. This is going to be my first. Oh, I should split my trades today. Maybe break my equity up into two. Only risk like half of it, so, or use half the margin, and then use the other half on this because I have to trade this today. This is going to be what I think would be easy money. Let's just go to the bigger or smaller time frames. Yeah, this level's holding strongly. I definitely see this going up now. I mean, after a move like this, right at this level, it's right at the level. Let's see if the last time it traded at that level, what did it do? Yeah, I mean, it happened. It happened. Here's where we are now. The last time it had a big push up, consolidation, push down, push. This is normal, Elliott waves. Push up. Then this level held and it pushed up for the next level, but didn't quite reach it. Consolidated, finally reached it. Slowly, but finally reached it. Came down again. That's exactly what I expect to see today. Pushing for that level, coming down again, and then breaking it. That is exactly what I expect to see. So, yeah, I think I'll maybe I'll wait for the interest rate decision and then base my trade on that. But based on what I can see on the chart, this is definitely an opportunity to go long. Anyway, that's my video for today. I hope it helps. Good luck and enjoy.